Hi everyone, welcome to this Q&A webinar on Miraya Rose. Just waiting for a few more people to join. We have quite a few people who've shown interest in this webinar, so we should be able to start shortly. Right, okay, so I think we have enough people who've joined in. Thank you so much for joining this webinar. Um, the way I'm going to do this through the investment note. I've already done a more detailed webinar a week ago. Some of you might already have seen that, so I hopefully have answered all your questions there. But I will anyway quickly run through where we are currently in terms of funding and where on this particular investment, so that then we can open it up to questions. So the main reason for doing this webinar is to answer as many questions as possible from investors or users who have any questions, not just on the investment, but maybe even on the platform structure, etc. So please feel free to ask whatever question that you have. It need not be restricted to this particular listing. All right, so let me quickly run through this investment. Miraya Rose, it's a grade A mixed-use development on Whitefield Main Road in Bangalore. It has apartments on top, 30,000 square feet office, 60,000 square feet of retail, pretty high-end retail. It's designed like a high street. There are not these big retail brands like Big Bazaar or Lifestyle, etc. These are all high street vanilla brands and some F&B outlets to attract people to spend some time in this particular development, including residents of Miraya Rose. But because it is located quite centrally on the Whitefield Main Road with a lot of frontage, it does attract a lot of footfalls. People come there for lunch, dinner, etc., and end up shopping at the various outlets there. Tata Chroma, which we are buying, is one of their best performing stores around the country. Their rent to revenue is close to 4%, which is really, really good. So obviously they are doing really good business there. Similarly for Urban Ladder and Nature's Basket, all of them have done extremely well. And Miraya Rose is not even operational. Out of the 80, there are only 20 or 25 apartments where people are living, and the remaining should be done by the end of the year or the first quarter of next year. All right, so 8.4% really high. It's a very, very rare opportunity to buy retail. You don't get opportunities to buy retail very often. Here is a chance to buy Tata Chroma, Urban Ladder, Organic World, and Nature's Basket. If you had to buy this yourself, it would have probably cost you, each of these units would probably have cost close to 6-7 crores, and you probably have not got the yield that we've negotiated, because we negotiated at a higher level, at a wholesale price level. Therefore, we are able to pass on that yield to investors. So it's a great way to access this particular product, this particular type of property for an investment size as small as 25 lakhs. So maybe that's the reason why the listing has done so well. It was oversubscribed the very next day. We got invest nows for almost 100 plus crores in the first 2 days itself for a 27 crore property. And now our team is just speaking to people, advising them with some of the questions, and getting them to sign the offer letter. We are already, yesterday we were already 80% funded. Now we are closer to 90. We are planning to take this off pre-book at around 90% funding, so which should happen anytime now or maybe on Monday. So if you are in the process, if you've not signed the offer letter or transferred the 10% to the escrow, then you should do it now, because that is the only way to guarantee your slot. Even transferring the 10% doesn't guarantee your slot. Only signing the offer letter guarantees your slot. So if you are in the system, I advise you to sign the offer letter as quickly as possible. Otherwise, you might miss this opportunity. I don't know when we will get to list and fund another retail property. There's definitely nothing I can tell you that we are looking at in our pipeline right now, which is retail, especially of this quality. So if you are thinking about participating in the retail growth story, then this is the best. All right. Um, so great tenants, not just what we are buying, but True Fit and Hill, Tony and Guy, Starbucks. There's F&B, Ebony, Toscano. Um, uh, the Z bar is opening shortly. There is also Cafe Noah. The other four tenants that we are investing in, the other interiors, all of them are doing extremely well. Located in Whitefield, which is 25% of the Bangalore office market and 25% of the total residential catchment, massive residential catchment in and around this location. Brigade is developing a new residential called Cosmopolis, which is almost part of which is already operational. There's Prestige, Ozone, there's Columbia Asia Hospital within a 2 kilometer radius, the Jack Welch GE Technology Center, ITPL, which has more than 3 million square feet of office space, all the top five-star hotels, etc. The metro, which is only a connection from the current metro to Whitefield, is most likely going to be operational next year, which will connect this part of the city to almost every other part of the city, which will be a big fillip to rents, capital values, occupancies, etc., etc. All four of our units, main front. The reasons to buy this property: great yield, very good return, 17.5. In terms of safety of capital, extremely safe, unlikely that we'll ever lose money here. Metro connectivity, it's a retail deal, which is a rare opportunity. It's a grade A retail. It's not just a small space in a mall, which is not doing well. This is a grade A high street retail. We've got it at a great price of 11,000 rupees a square foot, which is also what the residential there is selling for right now. The tenants, Tata Chromat, it's from the Tata Group. Nature's Basket from from Godrej, Urban Ladder, highly funded, 112 million funding raised from Marquee VC, so they are doing really well. This is an experience center, only one of three experience center. Organic World is backed by ex-Infosys founders. Great lease structures. This is Urban Ladder's one of only 7 experience centers, only one in Whitefield. This is Organic World's only store in Whitefield. Nature's Basket's only store in Whitefield. Right? If you look at all the recent leases that have happened there, we are way below market. Our average is 72.4, and tenants have been signed there at 120 to 150. In terms of health ratios, which is rent by sales, which is a key metric when you're looking at any retail real estate opportunity, all of them very, very healthy, all below 10% right now, which is a sign of a very profitable retail business. 8.4% yield, pre-book 1% included. And we exit, could be even more if somebody like Tata Chroma leaves, because he's paying a really low rent, almost 50% below market, therefore also quite safe. If you invest 25 lakhs, you get close to 14,000 per month credited to your account after fees and TDS. So yeah, that's about it. So it was a very quick run through of the note. If you want to see a more detailed webinar, I would advise you to go back to our website in the resources section, click on webinar, and look at the last one, which is almost 30 to 35 minutes, where I've gone through this presentation in quite a lot of detail, right? Okay, so now let me open it up to questions. I hope to answer every one of them, but I might miss out some, so apologize for that in advance. Let me open it up. Okay, so I've got a few questions here already. Let me start with, okay, there you go. How much carpet area of the property are we planning to buy? Efficiency is around 70 to 75%. So that's the carpet to saleable area efficiency. So that's what we will be getting, which is typical in any retail purchase. Can you please explain more about Whitefield? So that's Kandarp Shah. So Kandarp, I have delved on that quite deeply in the last webinar, so I would request you to go there and listen to that one. But I did touch a bit here also on the walkthrough. So hopefully that helped. Whitefield is the second largest office market in Bangalore after ORR. It has great catchment of residential. It is one area that I am personally extremely bullish on. If I look at entire country, I mean, apart from Whitefield, BKC in Bombay, Outer Ring Road, these are locations that are going to do extremely well over the next 3-4 years, just because of the demand supply dynamics, just because of the infrastructure that's coming there. That's going to be a game changer, especially in Whitefield when the metro comes. That's going to really reprice everything that is there in Whitefield right now. There was a time when Whitefield used to be at 25-30 rupees per square foot rents. Office rents have already moved there to 55-60 rupees, and it's probably going to go closer to 80-90 over the next 3 to 4 years. There's also not much supply there, which is a great thing. Outer Ring Road is drying up. There's hardly any supply on Outer Ring Road, so tenants have to then move towards areas which have residential catchment from where they can recruit employees. And Whitefield is number one amongst them. It has 3 of the top 10 international schools in the country. The biggest mall is in Whitefield, and so on. Right? So let me move on to the next one, which is Rahul Saria is asking us, the Chroma rent is very low compared to the other tenants. What's the view going forward? Also, why the ownership for 3 tenants 75% and not 100%? Any particular reason? All right, so Chroma is paying. Chroma signed on the tenancies first in this property when it was under construction, and therefore it was able to negotiate a very good deal. Also, it's a much bigger space. It's almost 50% of our portfolio, close to 14,000 square feet. So, therefore they got a better deal. But that also means for us, we have half the portfolio with a very solid tenant who is doing extremely well. His health ratio is 4%. So obviously, because his rent is so low, he's doing really good business here. And that is something that I'm really happy about, because even if there is churn, and churn is something that happens a lot more in retail than office, because offices are long leases, 9 years, they have employees working. Offices don't like to shift very often from one park to another, because a lot of things are affected by that, including employees. Whereas here is just a retail store, they can close and move anytime. So therefore, that risk always exists. The churn is always there. But that is why we've chosen units that have full frontage on the main road, which are much easier to lease. And we have half a portfolio in Chroma, which is doing extremely well. 75%, because 25% is owned by the landowner, who is a very renowned psychiatrist in Bangalore. This was originally her ancestral land. She still owns 25%, but we do have management rights. Because we are 75% owners, we have superior management rights on the property. Next question is from Kandar Shah again. Same builder is giving around ground floor office space of 77 per square foot. How much do you expect property appreciation? I mean, the builder is definitely not quoting 77. We've been speaking to him for a very long time now. There's not a single unit there which is available for less than 12,000 rupees. In fact, we've got a discount because of a bulk purchase. I believe, like I was saying, Whitefield is going to see a big uptick in terms of rents and capital values, and a repricing of the entire location. Next, the next question is from Rajesh G. Why are the properties on resale like Brigade, Umia not being closed? Can you please share your thoughts? Well, actually, we just closed both Umia and Brigade. Brigade, some of these properties don't close because investors quote a very high price. We don't control the pricing there, so they list it at 7%. 6.5%, etc. And when primary market itself, we are listing at 8.4. Not many people go and buy at 6.5-7%. So we've been kind of advising resale investors to price a little more aggressively, and once they do that, it does get sold. So we did that with Brigade. Umia, it's now sold. Brigade, we are in talks with one person, I think, in quite an advanced stage. So I guess that will also be closed soon. Next is property share registered under SEBI. Yes, we are a registered SEBI advisor. When is the deal expected to be finalized? I think about 45 to 60 days. That is the time it will take us to do the diligence, close out everything, draft the sale deeds, etc., etc. So easily about 45 to 60 days, hopefully sooner. Next question also from No, that question was from Balaji. The next question is from Rajendra Nayak. Uh, Two investments have taken a lot of time, IBC and BTP never materialized. Yes, IBC took a lot of time. It took almost 8 months, but and we know what the reasons were. One is, the builder did not have a khata, and we don't do any deals unless the diligence is 100% correct. We'd rather wait than risk investor capital. So it's finally now come in. The registration is on Tuesday. So that's a happy ending. The good thing is that the pricing has not changed for 8 months, because of which now we are actually, the escalations on some of the leases are going to happen in 3 to 4 months time. So our IRRs are going to shoot through the roof. Our yields are going to improve a lot more. So the deal has actually improved a lot for investors over that time. Next question is from Rajesh G, which is who will pay the property tax? Is the rent 8.4% is guaranteed? Do we need to pay maintenance? There is no such thing as guaranteed rent, guaranteed returns, etc. on property share, and any advisor or product that guarantees returns, one should be extremely aware of, beware of. That's not something that anybody can do. Nobody can guarantee returns. Yes, we can guarantee the rental yield as of now, because we know that there are 4 tenants. They are paying X amount of money for the price we are paying, and therefore the yield is known. But if one of the tenants may leave, and therefore the yield may come down, the rent will appreciate by 15% every 3 years, at which time the yield will go up. So as of now, we know it's 8.4, but it could go lower or higher. Do we pay maintenance? We don't pay maintenance. The tenant pays maintenance of 11 to 14 rupees amongst the 3 tenants. Tata Chroma pays 11. The other guys pay 14 directly to the builder, who maintains the entire property. Next question is 22,588 is carpet or super built? It's super built up area. Next question from Sandeep Reddy. How far is the proposed metro station? It's about 2 kilometers from this location. Is the Vaidehi Hospital metro station. The next question from Shibumon is the purchase price looks little higher than the prevailing rate in Whitefield. Getting appreciation from here will be really difficult versus office and residential. Retail always trades at a 15 to 20% premium. It's a grossier asset. It's the upside from retail is higher. And but like I was saying, residential here trades at 11,000. So the retail here actually trades at 12,500. But because we could buy the rights of the big check, we've got a lower price which we are passing on to investors. I do expect prices to appreciate quite significantly here, like I was mentioning. What is the road width in front of this building? Oh, very, very big. It's like a double road. So it's a very big, the Whitefield main road. It's quite, it's one of the main arterial roads that connect Whitefield to the rest of the city. Next question from also from Leela Vasant is, in the past, what is the average to sell the share in case I want to exit due to any reason, and what financial difference a shareholder needs to pay? In the past, it has taken us anywhere from 2 hours to sell to about 3 weeks to sell, right? It all depends on the pricing, what the investor wants, etc. So, but for a retail listing like this, probably it'll go pretty quickly, provided that it's priced properly. Next question from Balaji Sampath. Any reason and what financial difference a shareholder? I think I already got that. How do I get the ownership of the real estate? You get the ownership through shares of the special purpose vehicle. That's how you get the ownership. If you were to get the ownership directly in your name, then the same deed would have to be registered in your name, for which you need to pay 27 crores. And also you would not have the chance to sell your share in lower lot sizes. You would not get liquidity. You have to manage the property on your own and so on. Right? So these are some of the problems that the platform solves for investors. Next question, what are the risk factors? The risk factors are very clearly, we list only properties which are completed, occupancy certificate in place, operational, right? And we try to eliminate almost all big risks that are already embedded in any real estate investment. Most real estate investment risks are construction risk. The builder doesn't finish on time, the builder runs out of money, and therefore the development gets stalled for the longest of time, maybe even never takes off, and therefore you lose all the money that you've invested. You might have taken a loan which you have to pay, and therefore, there's chance of bankruptcy. But we eliminate all of those risks. The only risk we take is leasing risk, right? Which is to say that if tenants leave, then there might be some vacancy. We might have to find somebody else. Even that, in this case, is not very high, because Chroma is signed a very low rent lease, is 50% of the portfolio, and even if somebody leaves, we have four tenants in one listing, and therefore vacancy for all four tenants to leave is almost an improbable event. What is your strategy to negotiate with Tata Chroma about rent, as they're paying very low? I mean, we can bring them to the table. This is Sunil Maheshwari. Once the lock-in gets over, or when we're closer to the lease expiration, we'll have a discussion with them, and of course we can even sign a revenue share with them. That's something that retail tenants like to sign. So if they do well, we do well. There's a minimum guarantee and a revenue share, which can actually give a lot of upside to investors. Next question from Gaurav Mehta: how do group individuals own a share in the property? Through the SPV, you own a share of the property. I already explained that. Vikas Dhawan is asking us, what are some of the risks you yourself see in the property? I just answered that question, Vikas, a few minutes ago. There is contingency amount assigned in the reserves. What is that for, and how and when will it be given to the owners? That's a contingency reserve in case we need to spend something. We don't want to ask investors to pay at that point of time. We keep that in a fixed deposit with Citibank of the SPV bank account. In case we need that, we use it from there, so as not to disrupt the rents payable to investors every month. And if it's not used at the time of sale, we refund it to all investors. Next question from Bhaskar Shetty. Sir, I'm Bhaskar Shetty. I'm working in Saudi Arabia. There's no taxation over there. How can I submit TRC? All right, good question. If you are in the Middle East, you don't have any taxable income in India, the 10% TDS, you can claim it back at the end of the year. But then if you don't submit the tax residency certificate, then the TDS increases to 30%. So, I would recommend you to go to apply for a TRC. It's quite easy to get. A lot of our investors have already got it. You can mail our operations team. They can maybe guide you. But send an email at info. We can have a look at that. Next question from Michael. Is IRR inclusive of yield? What's the difference? Are we talking of 8.4% yearly rental plus 17.5? No, we're definitely not talking about 8.4 plus 17.5. Those kind of returns don't exist. That's 25-26% a year compounding. Very, very difficult to achieve those kind of rents, especially by taking these kind of risks. IRR, of course, includes yield. That's the way IRR is calculated. The next question from Venugopal. Since the floor area for some of the retailers are quite less, Organic World, 1200 square feet, that's right, there is quite a big risk of vacancy. Actually, no. Square feet is very easy to rent. That's how I think Starbucks is also around 15 or 1800 square feet. There are, in fact, more tenants who take up smaller vanilla spaces than bigger spaces of 10-12,000 square feet. So it's the other way around. Will property management fee be applicable when there's no tenant? Absolutely not. We don't charge any fee when there's vacancy in any part of the portfolio. For that part, we don't charge any fee, because we want to align ourselves to investors all the time. It should not be the case that we are charging fees and the charge any fee till the property is leased again. What is UKN? UKN is the name of the builder. He's built various properties around Bangalore and South India. You can have a look at their website. Next question from Sandeep Reddy. What percent of the frontage would we have in this property? I mean, it's full frontage, right? It's all of them have full frontage. You could see in the photographs. What you see in the photographs is the frontage that we have. Sudhir Kumar Padma is asking us, what impact will upcoming retail properties in the vicinity have on Miraya Road? There are not many retail properties in the vicinity, and it's very difficult to get a group of retail properties the way UKN has done. F&B, Toscano, Cafe Noir, Starbucks, Tony and Guy. A lot of people come here only to have a coffee at Starbucks and then end up staying there and shopping. So there's no real retail coming up on the street. Next question from Leela. What is the residential catchment area for the property? The residential catchment is very big, like I was mentioning in at the beginning of this presentation. Also, have a look at my earlier webinar where I've discussed that in more detail. Next question from Bhaskar Shetty again. Sir, I think square feet rate is quite high compared to current market price. Very difficult to get 10% appreciation. Are you sure? Look, we are never sure about the appreciation, right? That is something that is an assumption that may or may not happen. We know for sure that it will be 8.4%, which will go up to 9% by the end of 4-5 years. But as far as capital appreciation is concerned, we know that if the leases are appreciating by 5%, the underlying real estate is going to appreciate by 5%, right? That we know for sure, because if we buy something for 100 rupees and the rent is 8 rupees, right, that's an 8% yield, and after a year the 8 goes to 8.4 because of a 5% increase, then if we sell that 8% yield again to the next investor, he has to pay 105 for it, right? Because 8.54 divided by 105 is 5%. So if the yield are the same, which I expect, and in fact it can even go down, then we will definitely make 5%. Now, whether we make 10 or not depends on how well Miraya Rose does, how well this retail high street does. I'm very hopeful that it's going to do really well. But 12-13%, I think no sweat. More than that, absolutely it's possible. Next question from is Kandarp Shah again. Since the floor area for some of the retails are quite less, there is quite a big risk of. I already addressed that. How far is the property from the nearest metro station? Leela, I already answered that a few minutes ago. What is your strategy to negotiate? I already answered that. Can one do secondary sale of shares and debentures partly in your platform? Depends. If you invested 50 lakhs, then you can do it in 2 lots of 25 lakhs each, but definitely not below 25. So if you invested 25, you can't do 10 and 15. You have to do it in multiples of 25. Next question, that was Rahul Saria. The next question from Bharat is, what about khata deals for this property? It has got a khata. Yes, absolutely. It's got a khata, and that's one of the first things that we check when we do the diligence. Will the gain be capital gain on securities or not? So on the CCDs which we redeem, there will be no capital gains. On the shares, there will be capital gain. Capital gains tax in India is quite low. It's 20% after indexation. So we get the benefit of indexation as well as a lower tax rate. In fact, the post-tax return, because even if the capital appreciation is 10%, the indexation itself is 5% a year. So you need to pay 20% only on the 5%, which is 1%, right? So post-tax returns are quite high. Next question from, let me see here, Venugopal. Since the floor area for, okay, it's the same thing. Next question, Gaurav Mehta, how is the 17.5% IRR calculated? Are we saying the asset will see appreciation in 5 years? It's calculated as rental yield plus capital appreciation, Gaurav. So 8.4 plus 10 minus expenses. Syed Hussaini, is there any lock-in period for investors? Zero lock-in. You can sell whenever you want. Does this building have residential apartment and office space? Yes, it does. Like I was mentioning in the early part of my presentation. As an NRI, whether we have to pay any tax on income depends on whether you have income tax in India. If you have taxable income in India, yes. If not, you can even claim the 10% TDS back at the end of the year. Next question is from Rajendra Nayak, who's asking, there have been few reports about recession coming in the next 12 months. Do you see any risk on this investment? Yes, there is recession in manufacturing right now, especially in the automobile sector. And the government is doing a lot to address that particular problem. There has been a big issue in terms of bad loans in NBFCs and banks for almost close to 10 years now, which slowly, the banks are working through and capitalizing. But if you ask me, this India has a very strong balance sheet, and we have a very strong government in the center who has a very good majority, like we all know. So, I absolutely trust them to come out and do well there. I don't think it is going to affect a place like Bangalore or Pune or Hyderabad a lot, because these are all tech-driven cities, which are driven by uh, a lot of demand from multinationals who set up their tech companies, their back office, etc., which is driving most of the demand in these cities. So, we are a city like Bangalore is not really dependent on manufacturing that much. So I don't think it'll have that much of an impact, to answer your question. Next question is from Balakrishna Murthy. How much management fee or any other fee will you be taking while exit? So, like, I think our advisors would have mentioned to you, we charge 1% per year and a 20% above an 8% IRR. So up to 8%, you don't have to pay us anything. Above that, we take a 20% that aligns us to sell it at the highest possible rate, so that both our incentives are aligned. Next question, can I invest LTCG in this? You can't, because these are shares of the company. Next question from Naveen Bhatt. Rental yield is lower than IBC and Seawoods property. Generally, retail yield should be higher than office space. What's the probability the yield is going higher? The retail yields are actually lower, Naveen, because the per square foot prices are higher. Like I was mentioning, the upside is higher in terms of capital appreciation, much easy to sell, glossy asset, very rare in terms of supply. Hardly do you get a retail opportunity to buy. Therefore, when we sell also, there are not many retail opportunities available for potential investors. Therefore, it's much easier to sell. Next question from Balakrishna Murthy. Is property under property share or under all investors' name? It's not under property investors' names. As of now, property share is yet to exit a commercial property. When do you think you will be exiting any of the PS assets? The results will further strengthen PS's business model. This is Sandeep Reddy. Absolutely. We've not exited any of the commercial spaces because the short-term capital gains tax in India is quite punitive. If you exit before 2 years, you have to pay 30% without indexation. But if you exit after 2 years, then you get long-term capital gains tax as well as indexation. So we have already started shortlisting some of the properties for sale, which we will be starting from end of this year or next year as those properties mature. Also, we need to see the lease structure. Right? We want to sell at the highest possible rate, which means that you should sell when the lease increases by 15%, which happens every 3 years. So you buy something, the rent goes up by 15%, and then you sell at a higher price to the next buyer, which is what we are looking to do in some of these properties. Next question from Gandharv Shah. Is there a chance after full funding, if developer changes his mind not to sell the property? Yes, there is always this chance that happens. It has happened in the past, although not many times when the developer has backed out, but something comes up in the diligence report, right? Which we don't like to take too many risks. Like we say, we'd rather give the money back to investors and cancel the transaction, move on to the next one, then risk investor capital in a dodgy deal, especially a deal which has diligence issues. So that could happen. But we've done a scrub of the DD initially already on this property. So I don't foresee in this particular property to be there, but you never know. The nature of the beast in real estate is that, things that you least thought of always come up. But we try to bind the builder as much as possible, or the seller, in every one of our listings. Next question from Saurabh Mago. I am skipping some of the questions which I've already answered before. So apologies if I have not answered your question, but you could look at this webinar again, which we will post on the resources section. The next question is Saurabh Mago. It's a long one, so let me just see. The reason why I'm asking is that 8.5%. Okay, I've already answered this question before, Saurabh. This is with the appreciation and the 8% yield going up and how that affects appreciation. How will you manage exits, Gaurav Mehta? Very simple. We sell it to the next guy, or we list it back on the platform. That is the other advantage of property share. After 3 years, we can list it back on the platform, get new investors. Whoever wants to exit can exit. Whoever wants to stay can stay, obviously at the then market price. Who has constructed the property? The developer UKN Group. How long will SPV be applicable? Will this continue for 5 years or beyond once we sell the property, SPV is closed? Is there any plan to increase the basic rent during the next escalation period? We can't do that. We are bound by the lease agreement. We can only do that at the end of the lease. Okay. Next question is from Balaji Sampath. Does the shareholder get the ownership of the property or shares? You get shares, not the ownership. The ownership is with the SPV. You get shares of the SPV. That's how the structure works. Next question from Zulfikar Ali Sheikh. How much percent land ownership? Typically around 25 to 30%. Bharat K, who will pay annual property tax to BB and PBDA? We have to pay the annual property tax. It's payable only one time in April, May. Are there any properties in the works in Bangalore right now? In retail, definitely not. In office, we always look at lots of properties. We've been looking at hundreds of properties, in fact, in various cities, including Bangalore, but nothing that matches our criteria, nothing that matches our rental yield, etc. But hopefully, we should have something soon. Can I invest my LTCG to get 54 EC? You can invest. I have invested in Sky Vista and yield is low. I would like to exit. Please share your view. That's a separate conversation, Sunil. Not for this listing. You can mail info or our advisors separately, and they'll be able to help you. Murli Krishnan, is the 8.4% expected returns due to the I don't quite understand this question, Murli. I'm sorry. Is property share looking to add warehouses or distribution center? Absolutely, we are. We are looking at every kind of real estate asset which investors don't have access to. Warehousing is, the logistics sector is big in India right now. It's doing extremely well. So, that's definitely on our agenda. We have already looked at a few, rejected all of them for various reasons, quality, yield, etc., etc. But we continue to look for them. We continue to tell our brokers to look for it. So hopefully we should have something in the pipeline. Are you exploring any properties in Hyderabad? Any possibility in the next 6 months? Very difficult market. Sudhir, yields are very, very low, 5 to 6%. We would love to list something in Hyderabad. We've gone there multiple times, looked at various properties, but we've got nothing so far. So fingers crossed we'll get something. Michael K is asking us, what happens if the company shuts down for some reason? Nothing happens because your ownership is in the SPV which owns the property. We are managing the property after we purchase. After that, you can just give it to somebody else to manage it on your behalf. Property share is irrelevant to you and the asset. What is the lock-in period? Nothing, like I answered before. When are you expecting to get the first yield? We're going to get the first yield as soon as we register the property in about 45 to 60 days. What is the legal position of the investor? You are a shareholder in the SPV. Is it necessary to make this investment as an individual or a private limited company can also purchase shares? Any entity can purchase shares in India, whether it is an HUF, private limited partnership firm, LLP, individual, etc. Okay, final question from Sandesh Paturi. Is the financial model you have taken increase in total rent every year? What is this increase coming from? This is coming from the contracts that we've signed with tenants, Sandesh. So that contract says every 3 years, 2.5 years, there's a 15-14% increase. So that's what we've built in. Okay, I think that's about it. So thanks a lot. Lots of questions this time. We far exceeded our 30-minute allotted time, almost reached 40 minutes, but that's great. That means there's more questions. I hope I was able to answer some of them. Of course, if I've not been able to answer them, please feel free to drop an email at info. I read all those emails. Drop a mail to your investment advisor. He or she will be able to help you answer any question that you might have. But they are quite backed up with calls right now, so you might not reach them very easily. So that's one way to kind of get some of the questions answered, which I could not do here. I think some more questions have kind of trickled in here, so let me try and answer those as well. Let me see. I've already answered these. I've already answered Venugopal's questions before. Will there be any expenses related to any insurance every month or year to investors? We do have insurance every year, but in India, insurance is like very cheap. It's not very expensive, 25-30,000 rupees on a 27 crore property. So it's not generally paid through the reserves. Um, would you make available the list of investors and their contacts? List of investors, yes. Contacts, no. The privacy regulations, not all investors like to have their contacts revealed. Would you make... Okay, one last question. The last question I'm taking, I think I've answered all of them. One last question from Saurabh. Can you please also specify net yield after deducting property share charges and profit share? It's 8.4 minus 1, 7.4%. That's the net yield, which is there in this presentation as well, which I went through already. So great, fantastic, absolutely loved answering all you guys' questions. Thanks for tuning in. And if you are in the process, if you want to secure the share, do it quickly. That's my advice. And look forward to hearing from you guys again in the future in any new listings that we have. Feel free to drop into office anytime. We are in Koramangala in Bangalore. We are open Monday to Friday. So, fix an appointment, drop an email. We love to have investors here. We love to meet them. So please do drop in whenever you are in town, or if you are already based in Bangalore, then definitely come in. We do organize property tours for investors every 6 months. So once you're an investor, you get to see the property yourself, or you can always walk in there, have a coffee at Starbucks, which you can do in this sort of a retail listing. Great. Thank you so much. Thanks, guys.